Well, hello there and welcome to the day ahead. It is Friday, the 11th of April. I'm Nadine Blaney. Well, the roller coaster ride is set to continue for equity investors, with the ASX expected to drop 1.5% at the open. Our market will follow yet another night of wild swings in New York as the reality of the Trump trade war with China continues to sink in. The S&P 500 ended down more than 3% a day after U.S. President Donald Trump's move to temporarily lower tariffs on many countries caused that massive relief rally. So after giving back much of Wednesday's gains, the S&P 500 remains 7.1% below where it was just before so-called Liberation Day last week. The Nasdaq ended down more than 4%. At one point, it was off more than 7% earlier in the session. Weighing on the market were the Mag 7, including Microsoft. Its China exposure prompted Wedbush Securities to cut its price target amid that tariff uncertainty. U.S. big banks fell with sentiment souring and ahead of quarterly earnings, which begin on Friday in the United States. JP Chase, the biggest U.S. bank, is due to report first quarter results before the market open. Wall Street expects earnings to rise, revenue as well. However, investors are weighing up economic uncertainty and will be listening intently for expectations for the year ahead. Now, the drop in financials included the big U.S. asset managers. Pretty steep falls there for KKR and Blackstone. Gold, though, soared to record heights. JP however, cut the price targets of North American base metal producers off the back of tariff uncertainty, of course, with Teck Resources and Freeport-McMoRan on the list. Also relevant here today, oil stocks fell as the escalation of the U.S.-China trade war points to demand destruction. The U.S. gauge of consumer inflation showed that prices unexpectedly edged lower in March, with core prices cooling 2.8% year on year. That's growth retreating in that measure. But that is the first time in 5 years, and the read came ahead of the tariff announcement. Investors really did shrug off that good news, with tariffs looming large, of course, and the Fed's path unclear. Fed Governor Michelle Bowman said that while the U.S. economy remains strong, the effects of Trump's trade policies are unknown. And Chicago Fed President Austin Goolsbee said that rate cuts could resume once the uncertainties surrounding trade policy is resolved. Federal Reserve Bank of Boston President Susan Collins said that the tariffs will almost certainly drive inflation higher and depress growth, at least in the near term, but that monetary policy can respond. On the trade front, the EU said that it will delay retaliatory levies on American goods as countries within the bloc try to negotiate, but China is vowing to follow through to the end if the U.S. does not let up. We heard from RBA Governor Michelle Bullock last night. She said it's too early to decide on the path for interest rates and that the bank will be patient as it assesses the economic impact of U.S. trade policies. Bullock is warning of a period of market and economic volatility ahead, but says that Australia's financial position is well placed to absorb shocks from abroad. The bond market rout stabilized, with the U.S. 10-year yield rising by 3 points to 4.42%. The U.S. Treasury sold $22 billion worth of 30-year notes at a yield of 4.81%. The Aussie extended its gains to near 62 US, the US dollar falling 1.8%. Bitcoin coming under renewed pressure as well. It is now down below that 80,000 level, as you can see. On the commodities front, I mentioned oil stocks earlier. While prices of oil fell by nearly $3 per barrel, so wiping out the prior session's rally. WTI fell $2.28, or 3.7%. The U.S. EIA lowered its demand forecasts by 400,000 barrels per day for 2025. Gold prices jumped nearly 3% to an all-time high on that safe haven demand. Iron ore moved higher as well, up 2.6%, but it does remain below that $100 per ton level. So today it is all about equities. There's nothing big locally on the economic front. Worthwhile noting that AMP is holding its AGM. So that does it for the day ahead and this week. I'm Nadine Blaney. We'll see you next week.